Happy New Year, everybody. I hope you're enjoying your start to 2024. Got to get used to start saying that and typing that into things. That always takes a good week or two. I know for me at least. Figured I'd do another update today. Given we are starting the new year and have concluded obviously 2023. I did a Bitcoin update a few days ago. But given the monthly close, the yearly close, I felt a couple things were important to update in addition to ETHBTC, do Nasdaq, we'll do the dollar, we'll do gold, we'll do yields, and we'll call it a day. So with that, let's get rolling. So I have here the monthly chart, Coinbase monthly chart up, and this is a chart that you all have seen me present many times, typically in weekly format, just to use to illustrate my thought process behind this portion of where we are right now and what has preceded it, just being so eerily similar to what we saw back in 2020 and then the expansive phase that followed. And so just as a quick reminder exercise, my viewpoint, my thought, my belief that we are in early stage expansion, much like we saw coming out of the accumulation range in 2020, very similar. A couple things to note that are pretty critical when I look at the monthly structure, and then I'm going to go kind of dive into the similarities on the low time frame of exactly this section of the market, early stage expansion, this section of the market we're in right now, early stage expansion, and just so show the striking similarities. Now, first off, what do we have in terms of our monthly close from last month and where we are today? Well, we have a couple important things going on here. Last month, to close out, so December 2023, to close out the year, we closed just below the Ichimoku cloud. And for those of you that have been following me know how much I value this indicator. It took about 30 years to formulate, but could not get a close above it. Here we are with our monthly open for January, our yearly open, and we're now above the cloud. And we are now above the cloud. So we did not get, so far, a rejection follow through. In fact, we got the opposite. We've now started to make our way above it. Now let me get rid of the cloud and note something that may be even more important than the cloud in the context of where we are today. And that are these Bollinger Bands. And this is the monthly chart, remind you. And the Bollinger Bands up here on the monthly. Now, we got our first close going back to the 2020 cycle, this area above the Bollinger Band in the month of October. The following month, we made a run towards this midline, okay, of this entire channel trend that I contend is the same market, the same bull market we've been in since 2019. What do we get in terms of the close? Last month, we got a close above for the first time since, let's see here, April of 2021. And that marked that wave 3 top. So for the first time since April 2021, we're talking a long time here. We got a close above the monthly Bollinger Band. And why is that so critical, folks? Because that's when typically, and this is the highest time frame that I use, typically when Bitcoin really starts to expand, you want to see it get out above this Bollinger Band and then break out and cloud above it, as we saw here for 1, 2, 3, 4, 5 months, just hovered above it. Use it as support. And that essentially is what appears to be happening right now. And so with this type of move, my expectation this month, and I make no no qualms about it. I would expect us to challenge the top side of this range, that midline at a minimum, which right now sits at $76,000. That to me is a magnet. And so let me now get rid of that, get rid of the Bollinger Band, and now work towards a lower time frame to show some other similarities between these two areas, a 2022 or the 2020 low time frame and kind of where we are today. So if we look at 2020, very, very similar. Again, reminding everyone that the context of this similarity is the accumulation phase that we were in prior to expansion, and how these expansive phases, very, very powerful, typically don't get the retest people are looking for. And with this move coming out of the minor 1-2, we saw a 1-2 subwave 1-2 break out of this. At essence, the cap, this top of this accumulation range, 12,489, kind of consolidated vertical accumulation into a 3, 4, 5, and then we made an A, B, C. That was a fairly long correction. That was the 26th of November to middle of December. So that was about a month prior to then making this 1, 2, 3, 4 of 5 of this sub 3. Okay. And so what do we see today? We see, in my opinion, just an eerily similar looking setup, where the cap all year pretty much has been 31,503. And let me zoom in a little bit here. Coming out of this 2, we had a 1-2, sub 1-2, vertical accumulation 3, 4, 5, and a fairly protracted long A, B, C, lasted about a month. And so from a technical perspective, from where we are in this phase of expansion, mirrors very, very similarly to where we were back in mid-December of 2020, prior to that massive impulse. And so for me, it looks very similar. And just to map out what that impulse looked like is what I have here. Essentially, this is a mirror of that impulse. And I would not be surprised. Again, no one knows what's going to happen. Reminder, I'm not a financial advisor, but I wouldn't be surprised if we got something even steeper than this, given the catalyst, the narrative. If the ETF, in fact, is the catalyst, again, show me the charts, I'll tell you the news. And so the charts are telling me that there is the parabolic phase of expansion is in front of us. Hasn't even happened yet. This is not a parabolic move. This is vertical accumulation. And so the parabolic move, in my opinion, comes after you get, your vertical accumulation, and then things start taking off. And so that's the way I'm kind of viewing this. This portion, the segment of the market is where we are, and I think January is just going to be an incredible month. I could obviously be wrong as usual. This could be working on an A, B, C, D, and maybe we get one more E prior to an expansive move. But for right now, this is the way that I'm tracking it. I still just don't see any evidence that we're going to get any meaningful pullback that people are waiting for. The power in what lies ahead, in my opinion, and let me throw up a daily chart, in my opinion, has already been determined by where we were. Okay, where we were. This is the power behind what comes next. Okay. All right, next, let's go to ETHBTC. ETHBTC continues to look constructive to me. This is the weekly chart. And last week, I believe I went through this in pretty good detail to note just a series of, we have an established low, we have higher lows, we have higher lows, we have higher lows, and we've got 1, 2, 3 touches on a trend line, 3 touches makes a trend line. 1, 2, 3, 4 touches makes a trend line. And now we have 5 touches at the same trend line. Those are higher lows. What did we do at this segment of the market where we are today? Let me zoom in to make it a little bit easier to look at. What did we do? Well, it's one of my favorite reversal type of patterns, right? Where it just looks like, oh, we're going down, right? A series of lower lows, lower lows, lower lows into a macro higher low. And you get an RSI breakout of a downtrend. And, you know, something like that, you got a little bit of a wedge breakout. And so to me, this is still looking very constructive. My base case assumption is we get to 0.06771 before any type of meaningful consolidation, and then potentially a breakout. I'm going to look for as an option there, or potentially not. I don't know. We're gonna watch and observe. Not a lot of conviction in terms of that idea just yet. All right, next we've got the Nasdaq, and the Nasdaq just continues to perform how we've kind of been tracking it, right? I don't see. I just see a real problem. I see a real problem for people that are expecting big pullbacks. I mean, this chart's speaking to us, but there's still a lot of worry in the market. There's still, I mean, these indices are at all-time highs, approaching all-time highs, and there's still a lot of worry in the air, right? A double top, or oh, we've come so far, now we need to make a correction, when in all likelihood, and I haven't seen the data, right? Everyone wants a nice back test or retest corrective move, and the market typically doesn't reward the most amount of the participants, and that's where I see most amount of participants hoping, looking for pullbacks. The path of the most amount of pain for me still remains up, inducement. And so I could most certainly be wrong. We most certainly could get some type of run back to 14,340 prior to a move up. But again, this is a powerful, powerful chart. The energy in this chart, the energy here, you know, for it to just get released here and come back down, I just don't see it. I see, much like the energy leading up to this massive consolidation was released. Let's just see how that energy was released. And that's how I like to look at these things, in terms of potential, kinetic, stored energy. And so if we look at leading up to this consolidation in 2020 that lasted a few months, what came into it, obviously it wasn't as steep, but let's just look at the length, right? The length in duration of what came after, you know, almost got us to the all-time high. And so coming into, even if we use our December low, coming into such a massive consolidation, and that's a bull flag, right? That's what that is. That's a bull flag. Coming into that bull flag, the duration of what comes next, the energy that's released, I would expect to last, you know, at least into February. I mean, this tells me that energy could go all the way to May and really frustrate people, but who knows? I mean, and that here are my counts, right? I mean, and I didn't even do this exercise before I put these counts up, but the mean of this energy being released lines up with where my counts are. And it also lines up with how markets move, right? We could most certainly get up and then down. This is your mean, right? Or it could go again, like I said, the other way. And so the path I'm not as concerned with. The overall direction, the overall energy coming into this massive consolidation is what I'm concerned with. That energy release is what I'm concerned with, and that's how I view markets. And so that's how I'm looking at this, and we shall see. Just as another exercise, let me throw up the monthly here, and let's take a look at where Let's take a look at where like the MACD is right now. Does that inform any, any indication of where we are? Is this overextended? Is it just getting started? And on the monthly, we are most certainly not at elevated levels historically. Still curling up. Highest histogram since our October low, 2 consecutive histograms that are higher. Momentum just continues to be pointed in the up direction. So looking good. What is next? The dollar. This one's been very, very good to us, folks. This one's been very good to us. Don't always get the short term. The short term is the hardest, right? The short term is the hardest, and I get a lot of the short term right. I get a lot of the short term wrong. The higher time frame is where I seem to do better, but this one lately has been tracking pretty good on the low time frame, and so we've had this what I contend is a B, C, D, E type corrective move, and I've been contending my expectation is continued downward movement. And as I've always mentioned, nothing moves in a straight line. Let's see if we can identify any type of pattern at all in how this thing has been moving down. Right, so it's moving down as you'd expect it in terms of higher lows or lower highs, lower lows, lower highs, lower lows. I mean, that's a downtrend. And so could we get, another kind of up to 102 before? Sure. Could it keep going down? Could last week have been the lower high? Sure. But where did it stop? Notice where it stopped is where I had this line, that support line that goes all the way back to February of last year. And so it did meet a little bit of support there. Not surprisingly, we'll continue to monitor this to see where it ends up going. All right, next is gold, and gold just continues to do what we've been expecting it to do. And I know there's the narrative that gold typically doesn't break out when stocks are breaking out, but I'm not a narrative person. I simply am looking at the structures for what they are. Are they bullish? Are they bearish? Do we have higher highs? Do we have higher lows? Do we have lower lows and lower highs? Are we in uptrends, downtrends? And this is a weekly chart of gold, and I just continue to contend that this chart to me is a bullish structure, right? We had this massive rectangular bullish structure, a reaccumulation phase, if you will, with a spring. Here's our spring at a trend line that goes back to the 2000s, so making a macro higher low, and now it's just been kind of consolidating, sign of strength back up to the last point of support, which was this whole section here, and now sign of strength. You're literally 1, 2, 3, 4, 5 weeks. You're hovering at the range, at this all-time high range. So the bias for me here has to be breakout. Could it be a fake out? Sure, it could be, but that's not my bias based on what I'm seeing here. All right, next. Yields continue to do what we've been kind of tracking them to do. This is a daily chart, and again, what are yields doing? Let's look. Let's put some lines up and tell us what. Just have the lines tell us what the yields are doing. Yields are in a downtrend. That's it. I'm not doing anything really special here. After breaking a couple important macro levels, undercut, backtest, failure, we just have trend continuation in a very clear channel. So could we get up to 3.9 next week? Sure. My base case would be to continue this trend into January. February to get into the 2s would not surprise me at all. All right, folks, I think that's it. I think that's the video. I just wanted to do a little recap of some of the important things that we track. Hope you all have a great start to the new year. Let's make 2024 our best year ever, our best year yet. Thank you for all your support, and take care.